GM, everybody. It's Blake here at Trade Tracer. This week's video, as always, is going to get you prepared for this week ahead. There's a lot of geopolitical tension, as I'm sure you guys are aware, with Russia and Ukraine. And the market is reacting very violently to whatever news headline comes across the screen. So, how do we trade this? Well, Thursday and Friday, we had very powerful reversal days after a very, very weak downtrend for roughly the past 11 days on the S&P. Most of our trading setups were on the short side. If you were an aggressive trader, you did get paid. Not likely got paid. You did get paid. Any of those short setups you could have taken and capitalized on. As you guys know, I'm not somebody who likes to short the market. I don't like to short stocks. The long term, the market likes to go higher. So, what we like to do is we like to put the odds in our favor when the market is in uptrend and make our money in the uptrends. Now, you roughly, on average, get around 5 to 10 really good uptrends per year. So, we can go into a trading year knowing that, hey, we're going to have a handful of really good uptrends that if we're disciplined and if we capitalize on those uptrends, and then if we preserve cash and preserve trading capital during no trends and downtrends, odds are we're going to be very successful and outperform the market. Now, obviously, trading is not easy and it takes a lot of discipline and patience, and that's what I'm here to help you with is that aspect, the mental aspect of this game. Anybody can read a chart, anybody can teach you how to read technical analysis, but really the value in what I believe our services is offering is the mental aspect of the game, the game that gives you the edge to outperform. So what do we have going on here? Well, I'm going to reduce a couple of these, and you guys know my number one and number two key moving averages are the 10 simple moving average and the 50 simple moving average on a daily time frame. That's my grail, bread and butter, trend identifying moving average. But to get a little more, into the weeds and really understand, what's happening, I like to use a 5 as well. So the 5-day moving average does give me a little bit of an edge, and it helps me understand when the market starts to shift. So if we take away this 10 and 50, you can see this cloud is a 10 and a 5-day moving average, just plotted in a cloud. Okay, so when we have the green, the 5 is above the 10, and when we have the red, the 5 is below the 10 simple moving average. So you can see on Friday, we did close not only above the 5, but we did close above that 10 period simple moving average, which means what I refer to when we talk about the playbook of the cloud, which is the 10 and the 50-day moving average. So when we refer to the cloud, this is my cloud. 10 and a simple day moving average plotted and shaded. And you can see on Friday we did close inside the cloud, which means we closed above the 10-day moving average. Now this is a close in no trend. All right, so we're no longer in downtrend. We've exited downtrend and now we are in no trend. And no trend likes to steal your money. Okay, so don't get too excited about this candle. We need to see price strength confirmation above Friday's high on the S&P. So for the SPY, we could call that 437.84. That was the high on Friday. Anything above this, if we close above this level, that constitutes uptrend. Okay? So if we close above, make it simple, we close above 438 on SPY, that's an uptrend. Okay, and what do I do in uptrends? I get long. So if we close above this level, I will get long. Now, the fact that it was a Friday and we had a lot of uncertainty going into the weekend, I did not buy this, okay, because we've been in a massive downtrend, and you guys know I've been pretty bearish, and I've had a very bearish tone for, really since we broke below the 50-day moving average back here, right? When we broke below the 50-day, that was a signal to me to, hey, we need to be cautious, and we had this massive downtrend. Nice little 3-day rally, nice little uptrend here. Couldn't confirm above, and then boom, another huge downtrend, right? Another leg lower. So I'm still very cautious. Okay, we need to see prices back above the cloud. It's real simple. If we can see prices back in this area, then I'll be feeling a lot more confident with the strength of this move, the strength of this market, and I will be not only allocating new long market exposure to my trading account, but also I'll be getting, potentially even maybe some leveraged long exposure on the indexes. Right now, you guys know we are heavily hedged with gold. It is our primary position, just because of the way the market structure looks right now. I don't want to ride. If we do go into a bear market, I don't want to ride this market all the way down. Right? That's not how you. It's not how you generate wealth for the long term. So you can see on a monthly time frame, we are closing inside of this cloud, and we've had many trading days inside of this cloud, which is below the 10-month moving average, which is, just a roughly almost a year. So over the course of a year almost, we are trading below that. So we've lost momentum. We're breaking trend on the monthly time frame, and it's time to be cautious. Okay, so I say it all the time: one day does not make a market, and we can have these massive rallies, huge, moves, just ripping candles, face ripping candles, trapping shorts, making them cover, closing inside the cloud, and maybe just to roll back over again. All right. So I'm not in the bull camp just yet. And why not? Because price structure. Price structure tells us everything that we need to know. And right now, we are in no trend. We are trend, at least I am. And if you're following the system, we are trend following traders. And right now, we don't have a trend. We're in no trend. If we close above this level, then technically speaking, we will be in an uptrend, but it will still be a quote unquote contained uptrend because we're not in this level yet, right? We're not above the cloud. So we need to get above this cloud for me to feel really bullish and confident about the strength of this market. And until that happens, I'm still going to have my bear hat on, and I'm going to have the assumption that any of these major rallies are going to be sold into until we can close back above this 50. And really, guys, the 200-day moving average, we need to get back above this. This is anything below this 200-day moving average is not good. And that's that black line right here. Okay, so first things first, we got to get inside the cloud. And we did that on Friday. We closed inside the cloud. The next thing that needs to happen is what? Uptrend. Uptrend is price strength confirmation above Friday's high. The next thing that needs to happen, and I know this is, continuing to go on, but we need to get back above this 200-day moving average. That's that black line. If we get back above that, I'll start to feel a lot more confident that we could at least make a run to this 50-day, which is the top of this cloud. And if, that might be a good place if you're extremely bearish to short again, to roll over. You guys know we don't anticipate markets. We just react to them. But if that happens, right, that could be a potential scenario. I'm watching to see if price can get in this range above the cloud before I start pressing long. Still below a 200-day, still below a declining 50, and we're in no trend. Okay, so just keep that in mind. One day does not make a market. We need to keep our bear hat on, our caution hat on. We still need to be preserving capital, and if you have them year-to-date gains, and waiting for the next uptrend. Okay, so our next trigger long is above Friday's high. If we start breaking below the 10-day moving average, then it's time to start thinking that this was just, a bounce that was going to be sold into. Okay, so it's very, very simple. Our plan for this week is to preserve cash because we're still in no trend. If we go back into a downtrend, which will be a close below the 10 SMA. So, roughly a close below 436 on the SPY. If we go back into a downtrend, obviously our setups are going to be looking on the short side. So until we get back above Friday's high, if you're, your everyday investor trader, you probably should just be sitting in cash, waiting for higher probabilities and higher odds to be trading, because this is not easy trading. You can see just how volatile this is. Down, huge gap down, rip higher, okay, gap up, rip higher again. This is not easy trading, guys. So there will be a point this year, I promise you, where we will have a much easier trading environment. And those are the types of environments that we like to capitalize on. All right, so real quick, we're going to talk about the NASDAQ. NASDAQ looks, very bad. Double resistance at this 200-day. Tested it once, tested it twice, and rolled back over. Still closing no trend, but further deviated from the 200. So, tech continues to look bad. Let's take a look at gold. You guys know that this is our hedge in the investment portfolio. So on Friday, you had this massive gap higher, and this was a phenomenal time to scale some profits. We've been long, really since in here, and then we added up here, and then I had some levels in here that we could potentially hit. And you can see we did hit this level, and then obviously we gapped above that 180 level and sold off all day, and that was that same reversal day on the S&P that we saw, this massive, green candle. But gold is still a good hedge in my opinion. And why do I say that? Well, same reason why I always say it. The higher time frame, okay? Take away the daily, take a look at the monthly. Monthly time frame is confirming price strength above, we're at 4 month highs here on closing highs on the GLD Spider Gold Trust. Okay. I think this is a phenomenal hedge, not just because it is a different sector than equities, but I also think that it has a phenomenal setup. This is a bullish setup, regardless of the political and geopolitical environment that we're in right now with everything that's going on in the world. I would see this chart and still think this is a bullish chart, regardless of what was happening. Now the fact that we have, all this stuff going on with Ukraine and Russia and all of this tension, that just adds fuel to the fire for this trade, and it gives it, the narrative to go higher, right? And I said, the same thing with the S&P and the Nasdaq. We had been talking about this downtrend, since back here, right? We've been talking about this for a while. And when we got this massive gap down on Thursday, I had mentioned in our group, hey, we didn't need a reason for the market to roll over, but price structure was telling us everything that we needed to know, and it got the extra nudge to get this massive gap down when Russia did invade Ukraine, like officially. So that was the nudge that it needed, so to speak, to get this gap down. And then we had, obviously some more headlines, and we reversed higher. And as I always say, one day does not make a market. We're still in no trend. Still can't get long. All right. We need to be patient, have discipline, wait for higher probabilities before we can really start to think about getting aggressively long in this market. Let's talk about crypto for a second. Bitcoin not doing too much, not telling us too much. Below a 200-day moving average, below a declining 50 and a declining 10-day moving average. Does not look great, okay? So Bitcoin, I've mentioned it before, it needs to get back above this range right here. Okay, we get back above 45,000, maybe we have a chance to make a run to this 200-day moving average. Okay, but unless that happens, I'm hodling, right? I'm hodling, however you want to pronounce it. I'm not doing too much with crypto at this moment because price structure tells us to. We're in no man's land. You can't get long, you can't get short. If you've been long since previous levels back here, yeah, hold it. Okay, you're in the green. So just be patient with these things. Don't be too aggressive. Don't get FOMO. We need to see, price. I need to see price back above a 200-day moving average before I can start to feel really bullish about crypto once again. So just keep an open mind. We've come from, huge runs, and we've been, in a downtrend since November, right? We've seen prices on a steady decline since November. So don't be a hero. Don't pick a bottom. Just wait for momentum. Wait for a trend to develop, and then you can get long again. It's really simple. So just to wrap up, S&P still trading below key moving averages. On Friday, it did close in no trend, but as we know, no trend likes to steal your money. Wait until price closes above Friday's high and we get an uptrend before you get long. All right, I'm going to leave you with that. I'll see you guys in the open.